Let me now bring on board Vineet Bhatnagar, Managing Director of MF Global. Vineet, good morning. Thank you for joining us. Vineet, what do you want to start with? Global politics, local politics, monsoon, or yesterday's the policy disappointment?
I think all of them, because we have been watching over the last 8 trading sessions that Nifty has been hovering around a very tight range of just between 50.70 to 51.95 or 51.90. That being the case, I think it is becoming increasingly anxious for everybody to see as to where the direction is going to come about. We were looking at a possible breakout of 51.90 yesterday, but the immediate expectation that got built into the market in terms of the policy announcements or a possible policy announcement, when it came across as a disappointment, the market just shed all the gains that it had built up over the trading day yesterday.
So Vineet, does it seem like increasingly the Indian market performance is only going to depend on the government policy action?
Yes, absolutely. I think as against creating a very confusing analysis for ourselves, barring any major global macro event, which of course would have a rub-off effect on all economies alike. The investors, foreign investors, as well as the local high net worth individuals are clearly looking at some direction to come about as far as the local policy making is concerned. And that, I imagine, is the key that everybody is looking at. Of course, everyone wants to pull in everything at the same time, whether it is rupee, whether it is deficits, whether it is Europe. But if there is a way in which we could communicate clarity in terms of where the policy making is going to go forward over the next 6 to 12 months, there should be cheers on the streets, and we have seen it being indicated in a few places. For example, the build-up in the Nifty open interest as far as the Nifty futures and Nifty options is concerned over the last 2 trading sessions is very heartening. FIIs in particular have doubled their open interest as we move into the July expiry. Likewise, the rolls that we have seen up till now are above average. So the market is happy to increase the book size and take it to the next month. Underlying cash market purchases are also a net plus, though a very small 500 crores for institutions. But they do have an appetite to bring in more funds if there is indeed a clarity.
Vineet, so what are you advising your clients? Are you advising your clients that if you are in the money, it's time to roll over your position, or it's time to cut positions?
No. We are advising that they should roll over their positions. There has been some amount of short build-up that we have seen, and I can quickly elaborate on that. For example, as I was mentioning, the FIIs have increased their open interest to Nifty futures by about 120%, so almost double. But the rupee amount, if you see, is just about 2,400 crores, which means that there is this short-term scalping or trading that is going on, because the market has been behaving or moving in a very tight range of 50.90 to 51.90. So people take long positions and quickly get out of it, and take short positions, and then of course book small profit or loss. And at this point in time, we are recommending that the rolls be strong, which is clearly visible as of now.
Vineet, let's look at specific pockets of outperformance. Cement. What is driving cement stocks?
Cement has been, you're right, cement has been one of the sectors which is looking like a mixed bag, if you will. And cement, as you would have noticed, notwithstanding the decline that we were witnessing last year in September to December quarter, cement, some of the stocks, the frontline stocks, were actually showing some strength. And I guess the price elasticity that we were expecting to come about on account of demand disappearing, on account of a slowdown in the economy was actually not visible. So the realizations continue to be strong, and that of course kept the earnings intact, and also therefore the the stock price or the stock market performance for some of them. It continues to be the case even today. However, there is that an added element of shall I say optimism, at the risk of being a contrarian, optimism that if the economy was really to bottom out in the next 3 to 6 months, the look ahead outlook for cement actually is a positive.
Vineet, what are you picking up in JP Associates, because that stock also of late has been a marked outperformer?
Yes, there has been some good momentum that we have seen in the names that you just pointed out, JP Associates being one of them, and you could also actually correlate the F&O volumes in some of these counters and the underlying delivery related volume that is visible. So it is clearly an indication of the strength on the counter as far as names like HDIL is concerned. HDIL, JP Associates, these are the sectors that are showing strength, or the stocks that are showing strength.
Right. Vineet, what about banks though? What trends are you picking up there?
Banks have, started mirroring the overall benchmark related movement so closely that that it has become a heartache in terms of the type of trading positions that people end up taking. Generally speaking, we are long on the frontline banks, and therefore, as against prescribing a short-term trading strategies on these banks, if one were to really look at short-term trading, one could actually focus only on the bank nifty as the instrument, but underlying portfolio should continue to remain long on the frontline bank names like SBI, ICICI, HDFC Bank, Axis Bank, and there is of course some strength that one has seen in even names like Andhra, PNB.
Vineet, let me phrase my next question rather carefully. Identify a long trade for our viewers for the July series, a short trade, and then a pair trade or hedge trade.
The long trade and the pair trade would come from the same sector, which is auto. So one would like to take a long position on Tata Motors. The pair trade will be long Tata, short Hero. And as far as the short is concerned, we would take a short on a stock like Cipla, which has just broken the 200-day moving average on the downside.
And out of those three trades, if you have to nail it down to one high conviction trade, which one would you like to nail it down to?
It will be the pair trade for the auto sector.
What makes you bullish on Tata Motors and bearish on Hero MotoCorp?
I guess, it's a combination of just the underlying fundamentals and also the trading positions that the market has. Tata Motors has shown strength for a very long time, actually, from middle of January this year, and that continues to be the reason why there is a long bias as far as the street is concerned on Tata Motors.
Vineet, what about oil and gas? We've seen traction build up for HPCL as well as BPCL as well on account of the crude cool-off. But then bits and starts, you're also seeing moves come in for Kane, and Reliance on a net basis has been turning out to be a non-performer, even though it has some good days and some bad.
Yes, of course, the $90 per barrel kind of a crude price is obviously positive for some of these names that you mentioned as far as the oil and gas sector is concerned. And Reliance, of course, while it is intuitive to look at the crude price and also try to estimate as to what could be the direction of movement for Reliance Industries, it's not necessarily the case always. It is therefore a combination of a multitude of factors which drives how a very high weighted stock like Reliance Industries actually moves as far as a particular day is concerned.
Vineet, if I look at the news flow in last 3 months, currency has broken down, GDP has slipped, IIP data was not that encouraging, but still markets are holding on. Why are markets holding on when the macro environment, local environment, and the policy environment has not improved?
I think it's a combination of the contraction that you should look at from the point of view of the currency and the stock price together. So if one were to look at the extent of contraction that has happened, which is a combination of both the rupee depreciation as well as the price contraction in terms of some of the single stock names or Nifty in general, there could be an answer to the question that you just asked. Secondly, the amount of negative assessment that has gone about as far as the media is concerned or the analysis on the street is concerned is perhaps overdone. There perhaps is an optimism about bad news flow being overdone and therefore a hope or an assessment that what will come next will only be a bit more positive than what one has expected. We could all be wrong. It could take only a few trading days for the market to break down below 5,000. We have all seen it happening in a very quick succession of 5 trading sessions being a bloodbath as far as the sentiment change is concerned. But at this point in time, there is a benefit of doubt that everybody wants to give to where this market can go.
Vineet, somewhere are you working with the possibility that we could go back to December lows and what we saw in the month of May that could get repeated once again?
Of course, I mean it is possible. The combination of the negative factors that you pointed out, which are applicable to us as a local economy, and overlay them with something dramatic as far as global outlook is concerned or global market is concerned, it is indeed feasible and possible. We are living in very volatile days as far as markets are concerned, so it is indeed conceivable. But at this point in time, one has started focusing on how things will pan out, shall I say, on a weekly basis, because the markets are becoming headline markets. People want to pick up the news items and then take a trading position. As against that, if there is a way in which a clarity emerges, wherein a 12-month position or a 24-month position can be taken, that is what one is looking at.
Vineet, what about the currency though? Because some people on the street are talking about levels of 60 as well.
Yeah, I mean, there is definitely, a view that is held on the market where, rupee could continue to depreciate. I, for one, do not believe that it will be as dramatic as a level of 60 in the near future. I would rather look at a number which will be in the region of about 55.50 to 57 as the trading range or the range for rupee to a dollar.
Vineet, it's quite ironical, isn't it, that currency is at a fresh all-time low and IT stocks are underperforming?
Yes, and that is where the entire simplistic evaluation or assessment of a weak currency being always good for an export-oriented sector is concerned. It is too simplistic because while on paper it is true what we just talked about, what is clearly important is the underlying growth for that exporter or the export market. If therefore there is weakness as far as IT sector is concerned, which is in their major geographies such as US or Europe, we are talking about top line growth being impacted. So notwithstanding the fact that the currency may get weaker and for every dollar you could get more INRs, if the outlook for the top line growth is under doubt, what are we talking about? You could earn $2 earlier, now you're going to earn only $1.50. So multiply it by 53 or multiply by 57, you're worse off.